The dollar just crashed another 1.2% in minutes. Gold broke $5,250. And the President of the United States just said the dollar is doing great. If you think this is just another market correction, you need to watch this entire video because what's happening right now has never happened in modern American history. Let me break this down in the simplest way possible. The US dollar is the world's reserve currency. That means when countries trade with each other, when they buy oil, when they save their money, they use dollars. It's been this way since World War II. But right now, something unprecedented is happening. The very people who are supposed to protect the dollar are destroying it, and they're doing it on purpose. Here are the facts. The dollar has fallen almost 15% in just 18 months. That's massive. To put it in perspective, if you had $100,000 saved up 18 months ago, the purchasing power of that money has dropped to about $85,000. You didn't spend a dime, but you lost $15,000 in value. That's what currency debasement looks like in real life. Now, the current administration believes a weaker dollar will help American companies export more products. The logic seems simple. If the dollar is cheaper, then foreign countries can buy more American goods with their own money. Sounds good, right? But here's the problem. This theory only works in a vacuum, and the real economy doesn't operate in a vacuum. Let me explain why this plan is backfiring spectacularly. When you combine a weak dollar with massive tariffs, something terrible happens. American companies need to buy raw materials and parts from other countries. Things like plastic components, electronic chips, machinery parts. About 40% of what we import from China isn't finished products like iPhones or toys. It's the stuff American factories need to make things here. When the dollar is weak, these imports cost more. When you add 20 to 30% tariffs on top of that, the costs become astronomical. The data proves this isn't working. U.S. exports actually fell in 2025. They went from 7% of our economy down to barely 5%. This happened while the dollar was dropping. So the weaker currency didn't boost exports at all. It just made everything more expensive for American consumers and businesses. Meanwhile, gold prices tell us everything we need to know about confidence in the dollar. In just 12 months, gold has nearly doubled from $2,700 to over $5,200. In a single day recently, it jumped 3.4%. People don't rush into gold when they feel confident about their currency. They run to gold when they're scared. This is a vote of no confidence in the dollar happening in real time. Here's what makes this even more dangerous. The administration is planning to spend massive amounts of money on artificial intelligence infrastructure, rebuilding semiconductor factories, reshoring supply chains, and various trade conflicts. All of this requires enormous amounts of borrowing. And they're doing it through short-term treasury bills instead of long-term bonds. Over 22% of U.S. government borrowing is now short-term. This is critical because short-term debt rolls over constantly, which means the interest payments pile up faster and it directly increases the money supply. It's like choosing a credit card over a mortgage. The monthly payments might seem smaller at first, but you're paying way more in interest and you're always on the hook. The incoming Federal Reserve Chairman believes interest rates don't really affect inflation. This means we're likely to see multiple rate cuts in 2026 and beyond. Lower interest rates plus massive government spending equals currency debasement. It's economics 101. You can't print your way to prosperity. You can temporarily juice GDP numbers, which looks good for midterm elections, but you're destroying the value of the currency in the process. Now let's talk about what this means for regular Americans. You're getting hit from two sides. First, tariffs are making imported goods 15 to 20% more expensive. Second, the weak dollar is making those same imports even more expensive on top of the tariffs. It's a double whammy. Your grocery bills are higher. Your gas costs more. Everything you buy that comes from overseas costs significantly more than it did 2 years ago. The administration keeps saying inflation is solved and prices are coming down. This is demonstrably false. Commodity prices are rising. Oil is up. Copper is up. Precious metals are up. When the person in charge says inflation is over while every price signal is screaming the opposite, you know we're in trouble. This gives them political cover to keep cutting rates and spending money, which accelerates the dollar's decline. Smart money sees this coming. Last year, $88 billion flowed into gold ETFs. Not Bitcoin, not stocks, gold. The total is now approaching $600 billion. North American institutions and Asian investors are piling in. When the world loses faith in the dollar, they don't ask permission. They just move their money. And once Europe decides they've had enough and starts dumping treasury bonds, we're going to see another massive wave into gold and other hard assets. Here's the bottom line. For the first time in modern history, the biggest threat to the US dollar isn't coming from China or Russia or any foreign adversary. It's coming from Washington itself. The very people who should be protecting the reserve currency are actively debasing it. Whether this is intentional or just catastrophic incompetence doesn't matter. The result is the same. The dollar is in free fall and we're only in February. This is going to get much worse before it gets better. Protect yourself accordingly.